Go. And our next guest manages over $2 billion in assets and has 18 years experience managing money in this market. Todd Schoenberger is the managing director of Land Coal Trading. Welcome back to the show, Todd.
Thank you for having me.
All right. I saw your picks, and that's the first thing I want to talk about. It's very clear what you're liking right now. It includes technology in China. You like all the imposters. Anyone that's copying Google, Yahoo, anyone else out there, and they're Chinese, you're a buyer.
That's right, because when we're talking about this debt ceiling, and you have to think about the new offerings that the Treasury is going to issue, you have to wonder who the number one investor is going to be, and that's the Chinese government. And when I look at China growing at 9+%, you have a dynamic growth story there. Plus, when you start thinking about the next bubble, it's clearly going to be on the internet side. So Baidu is the Google in China. Then you look at Sina and Sohu. They're the Twitters and Yahoos, respectfully, in the country as well. So when I start thinking about a growth story plus everything that they're doing as far as partnerships with social media, those are the three companies that I would start focusing on.
All right, Todd, judging by your notes this morning, you don't have a very positive outlook on our economy. Let me just quote you. Todd's macroeconomic look: poor, horrible, and abysmal. Todd's look on jobs: poor, horrible, and abysmal. And it goes on and on. So you're really hiding in these Chinese stocks. Now, you've liked Chevron. You've been bullish on some of the other big companies, multinational companies here in the United States. Are you more bearish on them now?
Well, when I start thinking about the multinationals, I have to start thinking about the growth stories internationally. I mean, McDonald's is a great story. They have a dividend yield of 2.8%. 40% of their revenues come from London. Philip Morris is another one. We have all of these regulations here in this country, but you have a dividend yield of 3.6%, and they have another great international growth story. Those are the good multinationals to focus on. I would stay away from maybe the big oil companies, only because a proxy for big oil growth is really a growing economy, and you need that worldwide, and we're not seeing that. Clearly, we're not seeing that in this country, and then we also run the risk of a global slowdown, especially if this debt deal does not pass tonight.
Todd, before we let you go, give us something to be positive about that. Don't say anything is poor, horrible, or abysmal. We need some positivity here because we got a lot on our plates today.
Okay, well, I'll tell you what. Next year is an election year. So I have to think that the Federal Reserve will get involved. And I said it all along, and Chris knows this best, is that when I was saying how bullish I was, it was only because the Federal Reserve was involved. So I have to think that from an independent central bank point of view, right here in Washington, the White House is still going to lean on the Fed and Chairman Bernanke. So therefore, I have to see some type of quantitative easing 3. If that is the case, stocks will do great in 2012.
Oh, that is not what we wanted to hear, Todd Schoenberger. We wanted something more positive, jobs, growth, something. QE3 on the table. Thanks for that. We'll take what we can get with you, Todd.